everyone doing? Good to see ya. I'm assuming people are going to trickle in here over the next couple minutes. Good morning, Jeffrey Dean. Good to have you. Hope everybody's doing well. You're having a great day so far. Excuse me. I had a yawn for you there. Woke up, best part of the day. Me too. Woke up sleepy today. Good morning, Bob. That Texas sun will take it out of you. So worth it, though. It's funny. Every morning I check news and Ron C. I saw cheeseburger consumer confidence, and I actually chuckled this morning. It's kind of funny. So every morning, y'all, we're going to come in and we're going to check news. Couldn't care less what the news is about. What I'm looking for is medium impact, high impact. The S&P CS Composite 20 HPI YY is happening in 2 minutes. It's medium impact. It could create a little movement in the market. It is literally S&P news. So we'll see. 10 a.m. we've got a little more medium impact coming through. Has the potential to move stuff. Not guaranteed to move stuff. But maybe worth watching. So just for grins, let's go to the S&P and let's see if news moves anything. And I don't know why that was saved in my PC. So we've got news in about 30 seconds. And the only reason I'm looking at news is because I want to make sure that I don't put myself in front of a reaction. So I don't know if it's going to react or not, but let's watch it just for grins while people come into the room. So there's 9 a.m. And it's a dud. There you go. Who knows? It may pick up in just a second. It may not. But knowing that that reaction is possible is really one of the first advantages you give yourself every day. Making sure that you're aware. Maybe write a note, 10 a.m. because it's medium impact. I'll protect my position. I might not avoid a position on medium impact, but I'll certainly not leave a lot of risk on a trade just in case there's a little something that happens. So that's the first thing we do every day. And then I drag you over to the Nexgen page and I say to you, hey guys, this is where everything is. You guys have all been here enough. You know that. We're going to talk about a high probability trend trade today. It's what we do. We're going to go to the education tab. We're going to go to the software user guide. We're going to look at the rules and we're going to talk about them. And my goal each and every morning is to give you everything that you need to be successful with the software, to make sure that you have the tools you need to recognize rules being met. And most importantly, guys, we're going to keep it simple in the beginning. And we're going to talk about that high probability trade. That one where each indicator on every chart agrees with the rules for the trade. This is a trade that typically wins 70 to 80% of the time when you follow the rules. That's the key phrase in that one though, right? When you follow the rules, this is a trade that has the potential to win 70 to 80% of the time. One of my favorite phrases in this room is people type in here, usually about 40 days into Nexgen, and they go, man, I stopped looking for everything. I started following the rules and I'm winning a lot more. And guys, that's not uncommon because rules are nothing more than a pattern that has been proven to win more than it loses. That's it. If your rules don't describe a pattern that wins more than it loses, do they really deserve to be your rules? Because this is an investment. This is a job. The high probability trend trade's only 3 rules to give you that potential win percentage. But what it does for you is it doesn't keep you busy or active. It's not as exciting as a lot of people wish it was. This isn't a video game. About 90% of your day is going to be looking at your charts, looking at the information that it gives you, saying to yourself, I have the advantages that I need to take this trade, or maybe even more importantly, I don't have the advantages I need to enter the market. 90% of your day is just going through that process, reading indicators, making decisions based on your ability to read the charts. 10% of your day is typically trading, actively trading, getting into the market, getting out of the market. Guys, I watched my NASDAQ all morning I was up at 5:20 Central, and I haven't taken a trade today. I didn't get my rules met. There were a couple times where I said, wow, it should go up from here, but my rules weren't met for entry, and I chose to not take the trade. Guys, that's the consistency that I try to put into my day every day. Once you understand a couple basic concepts that learning this trade is going to give you, you're going to understand where the market is likely to continue. Initially, this is your entry for the highest probability trend trade. It's just a bounce point to continue with the trend. You'll understand where the market is likely to go. This is going to help you with profits. And you'll understand where the market is likely to stop. And that's going to be a huge red flag saying, hey, don't take that next trade into this area. This is an area that could create a reversal. This is an area that could stop the market, create an untradeable bounce. Let's just sit on our hands. So we're going to go through this chart reading, and you're going to learn it with only 3 rules. 2 of them are what I consider the foundation of the education process here, guys. Each rule, when the rules are true, or when it's true, gives an advantage. And my hope is that you get to the point to where when you look at your charts, you're speaking out loud. I have momentum. I have a clear path. I'm looking for that entry area. Good morning, Better Dad. Because when the 3 rules are met, you will have the advantage of momentum, a market where the odds are favorable for it to continue in the direction of the trend. You will have what we call a clear path, meaning that none of those likely to stop areas are in your way. And then finally, your 3rd rule gives you the advantage of an entry area, pinpointing where the market is most likely to continue. So if you commit to a trade, is these 3 items: momentum, clear path, and entry. And I'm telling you, you'll be on this particular trade maybe 4 to 5 days, and it'll open the door for more trades. And what opens the door is understanding momentum and path, guys. This is the foundation of everything that we do. Recognizing strong triggers and understanding how to identify a termination condition. So if you're struggling with either of those concepts, let me know. We'll work through it. We'll go through the language, figure out exactly how to do it, and give you some stuff to work on. But these 3 rules, simplicity, happen on only 2 charts. Even more importantly, the large chart, the slow chart, this chart will define direction. It'll define momentum. It'll provide the areas that could be problematic or that we need to get past. This very broad stroke of the brush shows the overall opinion of the market. Rules 1 and 2 happen on the large chart, guys. The rules 1 and 2 are met on this big slow chart, and you will literally know that your rules are met just using the very first bar, the most current bar. And on this bar, you're going to be able to identify strong triggers, rule number 1. And you're going to know whether or not you've reached a termination condition, rule number 2. So the large chart leads the way. I want you to get that put on a coffee cup. Keep it in front of you. Once the large chart tells you which way we're going that way fast, and there's nothing in the way, we're going to go to a smaller chart. This is a refinement chart. This takes that very slow-moving, difficult to see change large chart, specifically that 1 bar. Yeah, so Lonnie, we're going to do that, rule number 1. But do you see the first bar? Of course you do. It's right there. Do you see how the smalls are above the large and there's space between the 2? That's it. That's all you need to identify odds favorable momentum. So when we talk about rule number 1, you'll notice that, and let me show you. So this is a large chart, right? One of the things that people love to do is they will take, well, I don't see a trade opportunity there, but you guys will show me this picture, right? And your trade is right here. That's where you enter the market. Guys, all of this is nonsense. Doesn't really mean anything. Really tighten your view. Learn how to tighten your view. Understand that it doesn't take 4 hours worth of data to make a good decision about a trade. That most current bar is going to give that to you. So when we talk about it, Lonnie, you'll see exactly what I'm talking about. But you had momentum for 5 or 6 bars, but it's the most current bar that I'm worried about because this is where the market is, right? Over here, you're pining about ex-girlfriends. Let's talk about the one that we're with right now. Your entry chart, this is going to take that one bar, that first bar that tells you, hey, it's time to go look for an entry, and it's going to refine it into about 20 to 30 bars. You're going to see the inner workings of that bar that forced you into the decision that it's time to take a trade. This is going to really help you pinpoint the best of the best area where the market is most likely to continue. This is going to allow you to reduce risk. It's going to help you increase profit potential. And rule number 3, your entry rule, designed to get you into the market where the market is most likely to continue, should only be explored when rules 1 and 2 are met for the brand new user. And we're using these 2 charts because it's good to ask yourself, who am I trading with? Who am I trading against? Guys, your big chart, your large chart, that slow chart, that's the large crowd. Those are the men and women that create trends. They wake up, they're like, oh, this is a great day for the market to go up. Let me have a cup of coffee and dump $1 million into the market, make it go up. And it does. And they create the momentum that we use as an advantage. And these are the same people that react at key areas, the same areas that you're going to learn not to trade into because they may stop the market. When you trade with the large crowd, you'll see that the large crowd typically wins. The small crowd, your small chart, these are your fighters, these are your rebels. These are the folks that have the money, they have the influence, and they create what's called a retracement. And let's just define a retracement. A retracement is a small movement in the market that is counter to the underlying trend. So if the trend is up, the retracement will be down. And if the trend is down, the retracement will be up. We're going to use these retracements to pinpoint right where that small crowd that creates them is most likely to fail. That's what rule number 3 does for you. And their failure point, this is your entry for the highest probability trend trade. And typically they fail 70 to 80% of the time. So when they fail 70 to 80% of the time, if you're trading with the large chart momentum, if you're trading with that clear path on the large chart, by entering where they're most likely to meet their demise, it gives you the potential to win up to 70 to 80% of the time. And guys, that's what we're going to do for the next hour. We're going to break down those 3 rules individually. You're going to be able to learn the trigger line and Fibonacci rules for when it's okay to trade. When we say okay to trade, let that translate to your rules are met. If my rules are met, then I'll take the trade, guys. If my rules are not met, I will choose not to take the trade because my rules are a pattern that has been proven to win more than it loses. My rules give me a statistical advantage. You guys have the ability to simulate and to practice and to take trades and to mess things up and to do things great. And when you're on simulator, guys, there should be no fear of loss. It's nothing but education. The quickest way to get to where you want to be ASAP is to take those trades and drop them in the room, to take your pictures. Maybe you don't know what you're looking at. Take a picture of it, drop it in the room. Maybe you're studying termination conditions. Take pictures when you see them, drop them in the room, get clarification, guys. But simulate, practice, and post. Posting in the room. The people that post the most, they get to where they want to be the fastest because everybody that posts in my room, it's like getting a private session. The only thing that I ask of you, and I'm not too needy, is when you post in my room, I would love it if you would identify the momentum that you see when you took the trade, if you would identify the path, whether it was clear or not when you took the trade, and show me where you got in, and here's the deal, show me where you got out. And then what you're doing is you're describing the whys. Why did you do what you did? Because I had strong triggers, because that area had the potential to break, and because the small crowd gave me a pullback to areas inside of favorable large triggers. And what you're doing with your whys is you're creating a recipe. So when you do something great, when you follow those rules, when the advantages are present, your whys will describe the look, the pattern that you're taking. And even more so, maybe you make a mistake. Maybe you trade into a termination condition without strong triggers. If you tell me your whys and your chart read doesn't match up with what the indicators say, well, then we will revert to lessons. We'll go, all right, you called this strong triggers, but really we need separation. Or you said this was a clear path, but really it only had the potential to break. And what happens is it gets that recognition. And recognition comes through repetition. So the more you do it, the quicker you're going to get there. I'm going to hand you a plan today. So there's going to be 2 trades in the plan that I give you. I'm not giving you the end of the road, guys. I'm giving you the very first brick in the yellow brick road. The plan that I hand you is going to be designed to optimize your chances of success. First, using what we call a high probability trend trade. That's what we'll be studying. And then the second trade on the plan is going to be a trade that is dependent on the education that you received learning the high probability trend trade. It's what we call a medium probability trade. And you'll have to be able to look at your indicators and identify trouble. And you'll have to look at your indicators and be able to manage a little more assertively. So you're going to get both of those. What looks are you going to commit to? Again, it's just a pattern. That's all it is. Is anyone my age, early 50s? You guys remember in the 80s, video games, if you followed the pattern, maybe the bad guys stopped shooting. Maybe you got extra lives. Maybe on Pac-Man, the ghost didn't eat you. If you just followed the pattern, you could play on 1/4 for hours and hours. Guys, that's what the market is. The market is patterns. I am both a whipper and a snapper, for sure. So you've got to learn those patterns. You have to learn what looks you're going to commit to. And that's the second piece to becoming a confident trader, ASAP. I'm going to give you a spreadsheet. I give it every day. I've worked hard on this. Hopefully you'll work hard on it. But this spreadsheet, there you go. Better Dad, was that the code for your favorite? We used to play Contra on Nintendo. And it was up, up, down, down, left, right, left, right. Yes! Oh, I didn't catch that, but that was it. That was Contra. Right before you said that. So guys, what we're going to do is we're going to learn these patterns. So this spreadsheet is going to help you do that. Again, repetition creates recognition. So the first tab of this spreadsheet that I just dropped in the room, strong triggers. So right here in the green section, the heading is strong triggers. And there's over 50 pictures of what it means to have strong triggers. And these pictures have nothing to do with entries. They have nothing to do with management. They just define strong triggers. So Lonnie, going back to yours, the name of this picture was Strong Triggers First Bar. Guys, that's exactly what it looks like. The colors match. There's space between them. And on the very first bar, you'll be able to recognize that you have strong triggers. Good morning, Sid. So this spreadsheet, guys, what it's going to do for you is it's going to reinforce that look. And not only is it going to reinforce the look, it's going to give you words to associate with that advantage. So when you look at your chart, you're going to say, oh my gosh, I have strong triggers. Egads and little fishes, I have a clear path. And then you're also going to be able to recognize weak triggers, because weak triggers say, hey, don't trade. Termination conditions say, whoa, sit on your hands, 90%. So I'm going to give you a little something to be able to fill this out on your own to really get to where you want to be a little quicker. There's the client trade section, over 400 pictures of you guys using momentum, using path, taking great entries. Sid, what's going on with your pictures? What's going on with those pictures? It's all right. You've already posted that one, and I've actually created a better version, a bigger version, so that we can go back and read it. This has how to identify that highest probability trend trade entry. Um, the pinpointing, the best of the best entries, both long and short. There's ideas on management over here. First, the one that's in the plan that I'm going to give you, and then ideas on how you can manage differently when you become a chart reader. Patterns that repeat themselves, because that's what happens. The market moves in patterns. You're going to start to recognize patterns outside of this high probability trend trade. Some of them will be used in your trading plan. Some of them will have nothing to do with your trading plan, but you are going to see them. They're going to jump off the page. So the third tab is you taking your pictures and building your plan. Every time the rules are met, you drop it in the room, and I'm like, yeah, right on, good job. Put it in your trade setup. Look, start building that pattern recognition. You will go outside of the very basic management plan. Every picture you put in this room, start to finish, probably has a management opportunity. As an early user, what's wrong with your pictures, Sid? I'm not going to say anything's wrong with it. But do you see how when I open it up, it's tiny. It's tucked up into the corner for some reason. I can blow it up though, so it's no big deal. It's just kind of funny. I don't know why it posted the thumbnail. I've never seen it go like that. It's no big deal. It's not a problem, Sid. I just thought it was interesting. What are you using? Capture? Are you using Snagit? What are you using to take your pictures? Maybe I can help. Snagit? Okay. So we'll go through, let me go through the spreadsheet real quick, and then we'll do a quick little Snagit tutorial. We'll also do the capture because that's a part of it. Finally, guys, I want to introduce the trade tracking sheet. When you wake up and you go, oh my gosh, I want to be a futures trader, and you go to the CME website, what they say to you, what should I do as a brand new trader? They're going to say keep a journal. Keep a journal of your trades. Track your progress. So guys, that's what the last tab is. You're going to be able to put your trades in here. You're going to be able to talk about the advantages. But I think most importantly, not to sound egotistical, you're going to be able to put the feedback that you received in class. So every time you post a picture, and Sid, we'll use yours because it's pretty, you're going to be able to say, hey, check it out. My triggers were up. I thought I had a clear path. I took an entry at an area inside of triggers and I got out of trouble. And I'm going to say to you, oh my gosh, Sid, great picture, dude. Great, great, awesome. That's your pattern. That's the one. Don't miss it. And you're going to get that in the feedback. And Sid's going to go, oh my gosh, that's my pattern. Let me build my plan with it. And if you come back to these pictures every morning, so let's say yesterday you took 5 trades. And this morning you take 4 minutes out of your life to look at those 5 trades, to say to yourself what worked, what didn't work, to identify the patterns that are bringing you success, to maybe identify things that aren't working as well as you had hoped. It sets you up for the day, guys. It gets your focus where it needs to be. It will accelerate the learning. So what we're going to do is we're going to learn it. You're going to practice it. I'm going to hand you a plan. And my promise to you is that you will have everything that you need to be successful with this software by the end of the first hour. So let's do a quick little how to take pictures tutorial, guys. It's the most important part of what we do is getting feedback. I still get feedback every day. So Sid, you have Snagit, right? So guys, Snagit and Capture, these are your 2 programs. You should have one. If you don't, if you can't find it, I need you to raise your hand, guys, because I want you posting in the room. This is how we're going to talk. So Sid, hit Capture, the big button, right? And I want you to go to the top of your big chart and hold down that left click button. And I want you to drag it all the way down to the right on the small chart and then release. And when you release, you should have a nice big pretty picture here. I'm not sure what yours is doing to make it so small in that background, but mine fills the space. And then from here, I could actually just right click, copy it, and drop it right in the room. That's how I use Snagit. You can also share the link. So go to Screencast. Everybody should have a Screencast account. And when you share that link, it gives it to you right on your clipboard, and you could actually drop the link in the room as well. Either one. So Sid, I'm not sure exactly why yours is coming up in the corner. Does it look like that when it shows in the preview and Snagit? Does it look this small in the corner? Oh, I see what it is. See where it says add text here? You tried to write on the chart way off in the distance, so it gave that huge space. That's exactly what happened. I see it right there now. Good stuff. Yep. So go for the big one and make sure you're writing on the chart, and you'll be good. And then guys, this is more than enough information here. I don't need to see way back. I don't need to see 2 hours behind us, 3 hours behind us. I don't need to see 6 days below us. Guys, when you take a picture and you put your charts any way you want, give me what's important, right? That's a termination condition. Those triggers are still up. That's not an entry for the rules. That's all we need. Let's keep it simple, because remember, you're going to come back and study these pictures. So Sid, I did that with yours. I cut off 90% of your large chart. All of these arrows without descriptions, don't need those. Show me where you entered, where you exited, and in just one box. There you go. You don't have to tell me you exited. I know you exited, right? You didn't stay in that trade forever. You're not still in it. So go through it real simple, clean, odds favorable, 50-50, got in, perfect one Sid. Take that link, and man, Sid, this one should go in your trading plan. And there it is for you. There's a link to it for you. So clean and concise, because remember, you're going to come back and study this stuff, right? You want to make it as easy on yourself as you can. You're welcome, Sid. And this is what we're going to do, guys. We're going to go through this. We're going to do it. You will have everything you need. The only thing that Nexgen will not provide you is experience. I can't get you to take pictures. I can't get you to do the work. I can't make you study. I can't make you participate. But I'm going to tell you, from 5.5 years of teaching people to read indicators, the people that post the most, the people that ask the most questions, the people that use their spreadsheet, those are the people that tend to get to where they want to be the fastest. And most importantly, the people that keep it simple. Going back to basics and never leaving basics, that's typically the recipe for success. And I see a lot of names in this room that have done just that. Be one of them. But let's start with indicators. What are we looking at? I open up my charts, I've got my workspace, and I see triggers, guys. Triggers are on the large chart and the small chart. There's two triggers. There's small triggers, which are solid lines, and there are large triggers, which are dashed lines. That's really all you need to know. When they're going up, they're green. When they're going down, they're red. How easy is that? You don't need to know the math that goes into it. You don't have to be able to program to make these happen. You don't have to buy anything extra to make them more effective. Just know that that's a small, and that's a large, and that's a small, and that's a large. And you're going to use these in everything. You're going to use them to define the momentum. You're going to use these to identify termination conditions, and you're also going to use these to pinpoint your amazing entries. So know the difference. Both charts are also going to have what we call areas. Areas, for all intents and purposes, are horizontal lines that run across your chart. They all have names: divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, yellow 1-to-1s, mid bands. And again, all you need is to learn the names. You don't have to know how a fib is created. I'll tell you if you want. You don't have to know what the negative number means. It's just a byproduct of determining that there was a loss of momentum. You just have to be able to recognize that magenta line and know that it might be trouble on a large chart. You've got to be able to recognize that Fibonacci resistance and know that it could be an entry on a small chart. So learn the names of the lines. Don't overthink it. And then we're going to take these and we're going to create a high probability trend trade. We're going to recognize a pattern that has been proven to win more than it loses. Everything starts on the large chart. Big chart, slow chart, hard to see change chart. Large chart leads the way, and the large chart has to have strong triggers. That's rule number one. Well, the cool thing is, I love the color coding. The only way to have strong triggers, the only way for rule number one to be met is if you're trading with the trend. So instantly, Nexgen's trying to keep you safe. Go with the trend. If the background is green, it's up. If it's red, it's down. It doesn't mean jump in because you see green. It means look for your rules to be met for that high probability trend trade. And rule number one is trigger lines, strong trigger lines. So to have strong triggers in an uptrend, both small and large must also be green like the background. To have strong trigger lines in a downtrend, both small and large must be red, just like the background. Strong triggers is a separation of the trigger lines. So when the small triggers are up and above the large triggers, when the large triggers are wide, that gap between the two, picture scissors open, that gap lets me know that I have strong triggers. Smalls are below the large, large are wide. That space lets me know that I have strong triggers. And I have strong triggers here and every one of these bars going up. We're just using one of them. Guys, when you have strong trigger lines, this is the magic phrase you're going to hear in class. The odds are favorable for the market to continue with the direction of the trend. Odds favorable momentum, guys. That's what we associate with strong triggers. This is a look that can push the market. This is a look that can break key Fibonacci areas. This is a look that can even cover mistakes. So separation is strength. And when the separation goes away, that's weakness. When the scissors close, if you will. And when I have weak triggers, anything can happen up or down. So strong triggers, odds are favorable for the market to continue down. Weakness, anything could happen. I could see a big ugly retracement from the middle of nowhere. This is when key Fibonacci areas tend to hold. So rule number one is pretty black and white. Let's just make this nice and big. Does everybody see it? Separation is strength. That's your trigger look. What's it look like in a live market? Do we have it? There it is. So Lonnie, do you see the first bar? Smalls below the large, space between, everything down. Guys, that's your strong trigger look. Rule number one is met on this chart. Can you give me a Y if you see it, please and thank you? Because if you don't, let's find an example. But remember, strong triggers is only one rule. There we go. Here's crude oil. Smalls have returned inside the large. That's weakness. There is no separation. Do you guys see it? Advantage gone. It really can be that easy. It either is or it is not. But once you have momentum, oh, I love momentum, guys. We're going to look for that clear path. Clear path means no termination conditions. A termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of the area and the triggers. Whew, man, that's a lot of words. Let's try this. On that large chart, horizontal lines can stop the market. Horizontal lines can create an untradeable bounce. Horizontal lines can set off a fight between the buyers and sellers because, guys, these horizontal lines, these are where the large crowd are making decisions more often than not. You know about them long before you get to them. And it's a very simple process that says, hey, no trades into this area. So everything begins with price reaching the area, because if the large crowd is making decisions there, we have to let the large crowd push the price there. So in an uptrend, everything's going up. Dynamic Renko bars hit Fibonacci resistance. They hit a divergence high line. They hit a yellow 1-to-1. The decision making begins. And guys, once price reaches, we're done with price. The trigger lines tell the story. The trigger lines tell you if it's a termination condition. So ask yourself, where are my triggers? And if they remain below resistance, resistance is a termination condition. There could be an untradeable bounce off that area. There could be a fight between buyers and sellers as they jockey for position. It could break. The market could continue up right through that area. Or it could reverse the market completely, making those large triggers go from green to red. If that reversal happens, guys, that's a strong top. And a strong top is the precursor to the highest probability trend trade you can take. A strong top is rule number one for almost every every trade outside of the high probability trend trade. So when price reaches the area, the triggers remain below, rule 2 is not met. Absolutely no trades into the area. And the best thing that you can do is wait for the reaction. Wait to see what the large crowd wants to do. Don't try to predict what the large crowd is going to do because you will never know. Reverses, strong top, odds favorable. Large crowd pushes the market all the way to Fibonacci support. Price reaches the area. You say in the loudest voice possible, where are my triggers? The dog is scared, the cat is frightened, and your triggers are above Fibonacci support. And you say to yourself, oh man, this could create an untradeable bounce. This could set off a fight. This could break, or this could create a reversal, making it a strong bottom. But the only thing I'm positive about right now is that rule number 2 is not met. No trades into the area. That's not so hard, is it? If price reaches the area and the triggers don't break, do nothing. Pretty awesome, right? There it is, right in front of you. And it did it at resistance, and it did it at support. Hold on. And it did it up here by resistance, and right there at support. Wait, and resistance, and support and resistance. Hold it. Support, resistance, support. No. Guys, a little bit of study, and you're never going to want to trade into one of these areas, because if you look at it, you're not the only one that knows about them. But areas break. They don't always create a bounce. So this is what it looks like when they break. First, price reaches Fibonacci resistance. I'm done with price. Triggers tell the story. Smalls and large remain below resistance. Resistance is a termination condition. Wait for the reaction. Is everybody good with that? Can you give me a why? Because I want you to be scared of termination conditions as a brand new user. An area is not considered broken until both the small triggers and the large triggers, both lines of each, get above resistance. And guys, it takes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It takes 11 bars to produce a clear path. But once smalls and large are above resistance, resistance behaves as support. Your path is clear, and your path remains clear until you hit the next area, and then we go back to number 1. So brand new users, it's either a termination or it's a clear path. And then once that becomes second nature, it opens the door for the second trade on the plan I'm going to give you. And this is called a 50-50 trade. It's still a trend trade. You're still trading with direction. You're still trading with momentum, but the difference is that the area isn't broken yet. Small and large haven't gotten above that Fibonacci area, but if your small triggers smash through an area 3 to 4 points, and you have odds favorable momentum, and that's the key because momentum can break things. Strong triggers break areas. That's my brother's favorite saying. This look lets me know that that Fibonacci area has the potential to break. Potential. It's not broken, but the potential is there, which means I can look for an opportunity. I can look for a trend trade, but it must be managed assertively. This is going to be most of your trades. Man, that one had the potential to break, but it didn't. That one may have had the potential to break, but did not. Had the potential to break, but did not. Let's see if we can find any others. Man, termination conditions are good, aren't they? There's resistance behaving as support. There's resistance behaving as support. Not a lot of potentials here. There's a little potential right there. So guys, it's the same going down. Every line's a termination condition for at least a second. Price reaches, no triggers, no trades, sit on your hands, wait for the reaction. If it's going to break, first you'll see the potential to break, and you'll say it's only potential, I have to manage assertively. And once it's broken, it remains broken. It's clear. Support becomes resistance until you reach the next area. Everybody good with that? Pretty solid, right? Don't trade into a line. It almost seems too easy. I had someone call me once and say, Mark, there's not enough rules. There's no way this could work. I loved that because it means what we're doing is great. Guys, there's going to be times when your path isn't clear because areas are stacked. This is 90% of your day. It's okay to do nothing. Futures markets trades billions hourly, trillions daily is exchanged in these markets, guys. You don't have to be in every move. You don't have to be the first one in. You don't have to be the last one out. Guys, wait for the opportunities. Wait for the advantages. Wait for momentum and path. Find a way to capitalize. And guys, every trade doesn't have to be a home run. When you have momentum and path, find a way to get paid. Thank you for that, Ron. That was very timely. That's a trade called the Chili Dog. We'll go back to it. But I can tell you that the trade that he took, that he posted in the room, is this look right here. It's odds favorable momentum. It's getting past trouble, and it's getting paid before you get to the next trouble area. Guys, that's where the easy money is made. So everybody's good with that. Remember, large chart is slow. Large chart's a very broad stroke of a brush. Guys, it's hard to see change on a large chart. Inside of that one bar is all of these shenanigans, guys. So there's one termination condition that we will accept on a small chart. Only one. And it's 3 divergences in the same price range because it may terminate the trend. 3 divergences on a large chart may terminate the trend, but you're going to see it on a small chart first. And this is the small chart giving you a little heads up to the change that you can't see on the large chart. So if I have odds favorable momentum, if I have a clear path and I go to look for my entry and I see 3 divergences, I have to say to myself, my advantage is gone, my path isn't clear, no trade. If I enter a high probability trend trade and 3 divergences print during the duration of that trade, I have to say to myself, my advantage is gone. What a great exit condition. All right, you guys have the core. You have your foundation. You have momentum and path. The large chart has done its job. We're done with it. No more. Don't need it. It's over. History. Let's go to the small chart and pinpoint an entry, guys. So once I have momentum, if I have a clear path, my entry is so precise that I'm going to use a limit order to buy or sell one of those pullbacks at an area inside of triggers. One breath. Use a limit order to buy or sell a pullback at an area inside of triggers. And guys, the most important word there is inside. Inside triggers. Because your triggers, specifically your large triggers on the small chart, will define where the retracement, where the pushback, where the fight is most likely to go. So price returns to large triggers. It's a moving average. It happens. Regression to the mean, I think you smart people call it. So every time I go to look for an entry, I have to say to myself, price may retrace, and it may go somewhere from the top of these triggers to the bottom of these triggers. I don't know where, but I know that that's the range. So there's this cool thing that you can insist on as a brand new user to optimize your chances of success. We call it favorable large triggers. And favorable large trigger, is that it? Reversion to the mean? Thank you, Gino. I'm not a math guy. I fought tooth and nail to get out of college algebra. It took me 4 shots. Appreciate that. Reversion, not regression. Did I say regression? Reversion. Got it. See, I can be taught too. Guys, when your large triggers and your synthetic triggers on the small chart, and it's just 2 sets of large triggers, when they overlap one on top of the other, guys, this is the tightest little area where the price is most likely to retrace. It's defining the retracement zone. When you put fibs, midbands, or yellow 1-to-1s inside of them, you've got the tiniest little, the smallest little window where the small crowd is most likely to fail, where the trend is most likely to continue. So there's going to be 2 options. You're going to see a lot of this. It's going to reduce accuracy a little bit. It's going to increase risk a little bit. But when they're favorable, when they're one on top of the other, 2 snakes riding piggyback, man, that's when greatness happens. So let's define an entry. Notice that I started the entry sequence here with once the rules are met on the large chart. Once I can say to myself, I have the advantage of momentum. This is a market that's likely to continue in the direction of the trend. I have a clear path. There are no Fibonacci areas in my way. Nothing in the way to create a bounce. Guys, when you have that, your small chart is going to be screaming to the upside. This is the long trade that we're looking at. Just railing to the upside. And you're going to have a little fear of missing out. You're going to feel like, man, everything's going up. It's going up fast. It's going up without me. Maybe I should just jump into the market. And I see it all the time. And then you get a reversal bar. And this is your pattern, guys. This is the beginning of your pattern. A reversal bar signals the beginning of the fight. It signals the beginning of the retracement. And you have to say to yourself, where is that retracement most likely to go? And it's somewhere from the top of the triggers to the bottom of the triggers. This is where it's most likely to retrace. And the tighter those triggers are, one on top of each other, the smaller this area becomes, and that's going to help with accuracy. But triggers don't create bounces. Triggers aren't our bouncy points, guys. So inside of triggers, all caps, we need areas. And areas can be fibs, midbands, or yellow 1-to-1s. Write it down. Fibs, midbands, yellow 1-to-1s. Areas are not pink 1-to-1s. Areas are not divergence highs and lows. Fibs, midbands, and yellow 1-to-1s. All caps inside of triggers, guys. And this tiny little box, 2 ticks wide, this represents where the small crowd is most likely to fail. This represents where the market is most likely to bounce and continue in the direction of the large chart. So, reversal bar gets it going. Define where those down bars could go, but pinpoint where they're most likely to bounce, and with a little bit of study, develop the courage to activate a limit order, to buy a market when it's on the way down to that key area. You're going to activate a limit order, 2 ticks above the highest point of support. And you're going to say to yourself, but wouldn't I have less risk if I went lower? Well, yeah, but you run the risk of losing that trade, of missing that trade. So guys, 2 ticks above the highest point of support. And now you've done everything you can do. The only thing you'll ever be in charge of is following your rules. If the price reaches your limit order, you're in a long position. And you have the advantage of a market where the odds are favorable for it to continue up in the direction of the trend. And you have the advantage of a clear path, absolutely nothing in the way to create a bounce. And you have the advantage of having entered the market precisely where the market is most likely to continue with the trend. And guys, this is your high probability trend trade. This is what we talk about every morning, over and over, the same rules. Building the recognition, studying it, practicing it, developing the courage to activate that limit order. And it's the same over and over. Everything says up, the path is clear, the momentum is strong. Wait for a reversal bar, because this pattern repeats itself every day, every market. Once the reversal bar prints, identify the triggers, because that's where the retracement is most likely to occur. Triggers are not your entry. Reversal bar is not your entry. Pinpoint the areas inside of those triggers. Sometimes there's multiples, and your window of opportunity, the window where the market is most likely to bounce, extends from the highest point to the lowest point. But we're not going to stumble over a couple pennies trying to save a few dollars, guys. Your limit order goes 2 ticks above that highest point of support. That's going to be your entry for the highest probability trend trade. Anything below the trigger lines, anything beyond the retracement zone, anything on the other side of those areas most likely to create a bounce, guys, this is not where your advantage lies. Rule number 3 is no longer in play. The advantage of a precision entry is no longer on the table. And once you get to what I like to call the wrong side of the triggers, there is no telling if the market's going to go up. There's no telling if that line's going to create a bounce. Hell, it may just continue down forever. Who knows? Your advantage is lost on the wrong side of the triggers. In a short trade, reversal bar signals the pullback. Reversal bar is not the entry. Define the retracement zone with the large triggers. Large triggers are not the entry. Define where it's most likely to bounce with the areas inside. Your entry comes from 2 ticks below the lowest point of resistance in a short trade. Anything on the wrong side of the triggers, advantage gone. So by pinpointing where the market is most likely to continue, you've identified where the market shouldn't go. This is going to be your first stop placement. 4 to 5 ticks beyond those trigger lines. But Mark, why 4 to 5? Because guys, they're moving averages. It may go a tick or two, but at 4 or 5, that advantage is gone. And here's a part of trading that people don't really care for. Anything that wins 70 to 80% of the time, mathematically obligated to lose 20 to 30% of the time. So if you're taking a trade, if you're trading a pattern, that every 10 trades it typically wins 7 or 8 of them, it means that every 10 trades, 2 to 3 of them are going to blow through that great area inside of triggers, and you're going to be waiting there with a giant catcher's mitt and say, you know what, I'm not taking big losses. I don't have to trade on hope. I've studied this pattern. I've practiced this pattern. I've verified this pattern. My advantage is gone. My exit will be taken where the market should not go. Any questions about defining your entry? Here's the 3 pieces of the puzzle put together. Strong trigger lines. Guys, you're going to see strong trigger lines, and then you get strong trigger lines and a clear path. And the market is trading all the way up there by my little laser pointer. And this is where you're making the decision to take a trade. You're like, oh my gosh, I'm getting so close to trouble, but I know that my rules are met. And then that magical reversal bar. That reversal bar that says the fight is on. Here comes the retracement. And you're going to say, well, where's the retracement most likely to go? Oh yeah, from the top of the triggers to the bottom of the triggers. And you're going to say, but triggers aren't bouncy. Let me find areas within. Fibs, midbands, yellow 1-to-1s. And guys, do you see how from the top of this bar all the way to your entry, that's that tail on the large chart. That's a 1-bar affair with all of this movement. It's that refinement process that reduces risk. It's that refinement process that gives you so much distance back to trouble. So guys, this is how you're going to study the pattern. You're going to go back on a large chart and you're going to circle a tail when the rules are met, whether it is odds favorable in a clear path or odds favorable and potential to break. And if that tail lines up with an area inside of favorable large triggers, ladies and gentlemen, that's your pattern. That's exactly what we're looking for. So here we go, crude oil this morning. And it hasn't been moving a whole lot. Odds favorable momentum, clear path, there's your tail. You guys see how I'm doing this? Odds favorable momentum, potential to break, there's your tail. Odds favorable, potential to break, there's your tail. Guys, 3 tails. We're going to go back and look at them on a smaller, faster chart. Your first circle, right back to support inside of favorable large triggers, and it made it to the fib. with all that momentum. And look at that, 1, 2, 3, 4 divergences in the same price range. This is decisions being made at the key area. Second tail, odds favorable, clear path, pull back to support right there at the triggers, all the way to the fib. Bob, I believe you posted that one in the room. Let's back it up. That's yesterday morning. Crude is having some moments lately. Odds favorable momentum, potential to break. There's your first entry to support inside of triggers. There's your second entry in case it missed you. And that one ran all the way up to termination conditions. Can you guys give me a why? If you really want to get to where you want to be, guys, go circle those tails. Circle those tails. Do this study. Yeah, crude has been slow. It's okay. S&P's been hopping though, hasn't it? Termination condition, full reversal, odds favorable momentum. What's that look like on a smaller, faster chart? No way! Right to resistance, right at those triggers, right in the retracement zone. And down, 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 all the way to Fibonacci support, where it had the potential to break, but it created a big untradeable bounce. I love it, guys. So this is what we do. Weak triggers, right at a termination condition. Look at the market ramping up. Isn't that amazing? You guys knew about that area before it ever hit. All right. Done being smug. So here we go. How do I get to where I want to be, Mark? What's going to get me there the fastest? I don't know if you heard. I'm a little impatient. I want to be a great chart reader and I want to do it quickly. Well, I'm going to give you the path, guys. Take pictures. Take a lot of pictures. Take more pictures than you think you should be taking. I love that term, Lonnie, because when I say untradeable bounce, it just means it can kick back and hit my stop, right? Who wants to trade an untradeable bounce? It would be like standing 4 feet off of a brick wall with a basketball in your hand and throwing it as hard as you can into that wall, face level. It's going to kick back. It's going to ruin your day. So how do you get to where you want to be, guys? Take pictures. Commit to 15 annotated pictures a day. By the end of the month, you're at over 300 pictures, guys. Take pictures of strong triggers, weak triggers, clear path, termination. 25 each. Make it happen. Do it. Commit to it. Because if you do that, you're developing your core, your foundation. That's okay. Lonnie, I'm gonna tell you a John Novak phrase, okay? So I'm gonna pretend I'm John Novak and I'm gonna pretend you're me because I've had this talk more than once with them. Lonnie, how many times are you gonna trade into termination conditions, lose money until you get sick of it? John asked me that question. And it turned out after he said that, I still had at least another 500 trades into termination conditions before I finally got sick of losing money into them. So be able to identify strength and weakness, guys. Annotate your charts. This is why it's strength. This is why it's weakness. Clear path, termination, same thing. Annotate your charts. This is why it's a clear path. This is why it's a termination, because price reached an area and the triggers didn't break. Get these into your spreadsheet, guys, and go study them every morning. Give yourself 5 minutes. That's everybody, Bob. You guys think you're the only one. Everybody trades into termination conditions. Why? Because it means that you're not being patient. You haven't traded in 10 minutes. And you're like, oh no, the market trades billions hourly, but I haven't been in a position in 10 minutes. I'll go ahead and trade into a termination condition and hope it breaks. At least that's what I do. So guys, if you go through strong triggers up, you take that picture, you identify it, you write out what it means to you, you're never going to screw up, whether it's strong triggers or weak triggers. And look at there. Untradeable retracement from weakness in the middle of nowhere. Strength breaks areas. Pretty cool, right? Know the difference. And then as you go and take those pictures, I'm not just going to send you out into the wild with wolves. I'm going to give you the high probability trend trade checklist too. So we're getting the visual. And we're creating an association with words. There's a little neural connection that's created when you do this. This is a strong top or bottom. Is the market coming from a strong top or bottom? It's not mandatory, guys, but it adds a little bit to the trade. A strong top or bottom is a no triggers through termination. That reverses the market. So every strong top or bottom must be a termination condition first. And if it reverses the market, now it's a strong top. Any high probability trend trade taken right after it is the highest high probability trend trade. First it's a termination, then it becomes a strong bottom. Do I have momentum on both charts? This is the best of the best. Strength is always separation, weakness is always closed triggers. Guys, know the difference between the two. And guys, this is the one that's going to get you. This is the one that's going to set you up for the best success, guys. Know whether it's a termination condition, the potential to break, or a clear path. And I'm not saying any of them are going to always be a red flag. But if I know that it's a termination condition and I make the choice to trade into it anyway, and a lot of you do, at least you say to yourself, I'm trading directly into a termination condition. I'm going to have to manage this thing tight and aggressively. And then you're going to say, well, it's only the potential. I'm going to have to manage this thing tight and aggressively. And then you say, oh, it's a clear path. Ha ha, run, baby. Let's go. This is where I'm going to look for bigger profits. And once you know what you're up against, you know how to handle the trade. Understand first where the market is most likely to continue so that you can figure out where the market shouldn't go. That's going to help with manager. Cheeseburger news, here it comes. And then finally, the second page is just a high probability trend trade checklist. This is for you guys to print out and put on your desktop. This checklist is awesome. So if you use Market Replay, guys, Market Replay, and here's the instructions. Market Replay allows you to go back and replay the day, to fix mistakes, to take trades that you skipped, to skip trades that you took, that you shouldn't have, to work on management. And guys, the greatest thing about Market Replay is it has a pause button. So you can run the market through, you can hit pause, you can make sure that your rules are met. And even as someone that doesn't have the reaction time to do it live yet, you will see the potential of this trading plan by using Market Replay and using that pause button, guys. And I can tell you, nobody's ever used this checklist truthfully and done worse than 70%. And I say it every day because I think it's important. I've had engineers run through this checklist because you engineers, you know how you are. And it was a 400-day test following this checklist, and the win percentage was like 82, 83%. But that's following rules. These are also the same rules that I would love to see you write on your chart. I would like you to tell me where the market's coming from. I would like you to use that acronym, OFM, with an arrow pointing at your triggers. I want you to tell me whether it is a clear path, whether it is a 50-50 look, potential, or whether it's a termination. And I want you to use that language, area inside of triggers, because that's going to get you into the best of the best. And then finally, the KISS plan. The KISS plan, the Keep It Simple Sunshine plan for everybody but Bob. Guys, this is a stepping stone. That's it. This is your foundation builder. This is the beginning. This is not your get-rich trade. This is the one that teaches you to see it. Thank you, Ron C. Guys, this plan is designed to optimize your chances of success with the high probability trend trade as a new user while you learn to read your indicators. This gives you something to follow that has been proven to win more than it loses. This gives you something to follow that has gotten brand new next-gen users funded in those prop firms in their first 30 days. Through simulation, study, class feedback, and continuous practice, you're going to create your own plan. You're going to maybe add things to entries. You're going to change management. Guys, you're going to write your own plan once you can read your indicators. But there's two things that you have to know before you sit down to trade. Why will I enter? Well, because my rules are met. Let that be the only reason you'll enter. Because rules are a description of a pattern that has been proven to win more than it loses. That's it. You have a statistical advantage, guys. And if you take the time to verify this pattern, you learn to trust it, there's no reason to ever not enter the market when the rules are true. Your rules are going to help remove the emotions. And you're going to start saying clever things like, I entered the highest probability trend trade. These mofos are going to have to come get me on the other side of the triggers. I'm not going to give them my money before my advantage is gone. Why will I exit my trade? Because the advantage is gone. Or you get paid at your profit targets. How am I going to know my advantage is gone? Through chart reading, guys. But until you can really do that, let it be systematic. Let it be pragmatic. Make it all the addicts, automatic. Define your entry. Get in at the best spot. Give yourself the lowest risk and the highest probability for success. And then you're going to manage it. Management's scary because management has you looking at your P&L. Management has you counting ticks and watching red numbers flash in front of your face. So let your management be every bit as mechanical as your entries as a brand new user. Stick to a plan, learn to follow a plan. Embrace the idea that you can't go bankrupt on simulator. Let it play out. Your KISS plan management is based on 2 contracts. And it is designed to do 2 things. Let me get that off to the side. It is designed to teach you where to put your stops and how to trust that that's the best spot initially. And it's focused on getting you paid. Has anyone in this room ever been up $500 or $600 in a trade only to lose money? Or been up a couple hundred and get stuck out, break even, and never take profits? My hand's up, guys. My hand is scraping the ceiling right now. Why do we do that? We do that because we're greedy. It's human nature. We do that because we can't stand the thought of not getting all the money. Guys, the goal of trading is to get paid. The goal of trading is to make money, not to give it back. And when you really start to trust that you have something good, when you know the next trade is coming, your willingness to get paid goes up exponentially. But until it does, this is going to help you get paid. And this is it right here. Exactly, Ron. It's like teenage boys and, ooh, never mind. I'm not going to do that. So if your entry is 2 ticks below resistance inside of favorable large triggers, then your stop is 15 ticks. It is 4 to 5 ticks above the trigger lines, 15 ticks from your entry, right where the market should not go. It's $150 worth of risk per contract. You're going to know what your risk is before you ever enter the trade. You have to be okay with that risk. You have to learn to be okay with that risk, guys. Because if you try to shortcut it and put your stop in a retracement area, it's likely to get hit. If you put it below resistance inside the triggers, it's likely to get hit. So if I enter where the market is most likely to continue, then my stop is 4 to 5 ticks above the triggers where the market should not go. Your targets are predetermined, guys. Manifest destiny, $100 and $200. That's it. If you don't get stopped out, if it's not part of that 20 to 30%, reversal bar is going to print in the direction of your trade, and you are going to redefine where the market should not go. This is your opportunity to move your stop 2 ticks above the reversal bar. We call this a confirmation bar because it is confirming that now the market is going down with the trend. It's confirming that the market is going down with that momentum. It's confirming that the market is going in the direction of that clear path. Ideally, it keeps going. Your risk is reduced. Now you have $30 per contract. You went from 300 to 60. That's a pretty significant drop, all based on a great entry. And you still might get stopped out, but if you don't, it goes to your first target. And your first target's only $100 away from your great entry. If you're one of my traders on the Dow or the RTY, it's going to be $50 away from your great entry. And if price reaches your first target, 1 contract is automatically removed. those funds go into your account, guys. That's the success that breeds confidence. $100 doesn't feel like a big trade, but what if you hit $100 5 times? Suddenly it changes your life. Guys, with one contract remaining, you're going to move your stop to break even. You're going to take all the risk off the trade. And it's either going to hit your second target or it's going to hit you break even. And if it hits your second target, that's a $300 trade. That's a $300 trade in 4 minutes out of your trading day. That's a $300 trade that, if that's the best you do daily for an entire trading year, is a $75,000 year. So the goal, guys, is that it's not just taking all the trades. It's taking the best trades. It's taking the best trades and having a willingness to take money off the table, to protect your investment, to be consistent day in and day out reaching your goals, because that's what's going to get you to your long-term goal. So I promised you everything you need to be successful. I'm going to give you my tracking sheet again. Telling you guys, use that sheet. And I'm going to give you a zip file. I updated it this morning, and this is called Everything You Need. And inside of that zip file is the KISS plan, the first trade, and then, guys, it's got the second trade on it too, that potential to break trade. Inside of the zip file is the high probability trend trade checklist. Inside of the zip file is chart reading 101. And I think, did I put this one in there? Hold on. Yep. I think the most important file, and extract this one, guys, is this right here. 5 years ago, I started with Nexgen. And I didn't start with Nexgen as an educator because that doesn't make sense. I didn't understand it. I started where you are, ground zero, brand new, never seen this stuff before, really, didn't understand it, couldn't wrap my head around the idea that you could sell something you didn't possess. If I had this sheet 5 years ago, my life would have been much easier. So this is kind of everything that we've talked about in the last hour. So if you're brand new, review this. If you're old school, review this. Let me know what you think. 5 days a week, guys, I'm here to teach you 3 rules on 2 charts to give you those advantages. That's the whole thing. This goes through what the advantages are that you're going to learn. This goes through the idea that momentum and path are going to set you up for long-term success. It talks about the rules, where to find them, the indicators that we use, identifying momentum, identifying termination conditions, identifying strong tops and bottoms, defining your entry, and how to study. Everything that we just did in over an hour consolidated into 2 pages, guys. This is the path of least resistance for brand new users. And if you embrace all of this, if you keep it that simple, guys, you can find an extraordinary level of success with this software before you ever even get good at it. So that's my first hour. Are there any questions? I'm going to take like a 5-minute break, maybe a 4-minute break. I don't know. There's no telling with me. I get a little willy-nilly every now and then. When I come back, we're going to look at the charts that you guys have posted. We're going to answer any questions that you post in the room. Every chart posted goes back to momentum, path, and entry. Every one of them. Every chart you post in this room is a lesson. So make sure that you're taking the time to annotate for me. Please and thank you. I'll leave you with the S&P, which has odds favorable momentum and the potential to break a divergence high. If you choose to take this trade, you do have an area inside of triggers. But remember, it's not a clear path. I'll see you in just a minute. Into the second hour. Guys, whether this was your trade or not, that's momentum with the potential to break that pulled right back to support inside of triggers. And that's momentum with the potential to break that pulled right back to support inside of triggers. Do you guys see it? Whether you took it or not. And now we have 3 divergences in the same price range. It'll be fun to see what happens. So I'm going to go through and I'm going to start clicking on pictures, guys. And this is the second half of class. Don't be the trade police. Don't be the one that says, oh, that broke the rules, Mark. That's not my job. My job's not to get you. My job is not to say you did it wrong. My job is to look at what you've done and to talk about the way you're reading your indicators, to see if there's anything I can give you to help you do it better. So Bob B. the man got us started. He said, back from the beach, checking the ES in the afternoon and saw this look. Bob says, check it out, Mark. Strong bottom, termination that reverses the market. And then strong bottom again, termination condition. Didn't even have to reverse it. It was still going up. Odds favorable momentum. He's giving me the look. Hey, Mark, here's my arrow. Here's my momentum right by the trade. And look, I've got a clear path. There's nothing in the way. So we go to the small chart. And he said, man, I didn't have a mid-band inside of triggers. I chose not to take this trade from the wrong side of the triggers. But that's okay. The market came back for me. I entered just above support inside of favorable large triggers. And guys, this is a huge one. 2 divergences doesn't kill a high probability trend trade. It takes 3. Bob knows that. Stays in his trade. Easy money, 650, 750. Bob, this is a gorgeous high probability trend trade with amazing patience. So I'm going to steal it. And I'm going to go in the client trades. And I'm going to drop it in here. And I'm going to say something clever like Bob B. Perfect high probability trend trade long. So if you're brand new and you're studying and you're like, man, I need to see a perfect high probability trend trade. Let me look at Bob's. And it tells you exactly why. Bob, this is freaking gorgeous. Great job. All right, let's go to the next one. All right, Sid posted. And Sid, I'm going to do my little revision on yours. We're going to show both. So here's the first one. Let me see if I can blow it up. I know there were some challenges. So this is the one of the things that I like to talk about. So Sid, your entry is right here. And I'm not knocking you. I don't need all of this. Like maybe coming from the bottom. All of this is just noise, guys. Learn how to put that in the rearview mirror. But I love this. I entered because my triggers were going up with odds favorable momentum. Absolutely. And then Sid, you said you had a clear path. And this is where we're going to get into the chart read. Small triggers have absolutely decimated these problem areas, but your large triggers are lollygagging a little bit. Do you see it? So this is what we call the 50-50 look. Strong triggers, small smash, large haven't made it. Are you guys with me? And the only reason I say, hey, guess what? This is the 50-50 look is because it puts a different hat on your head. Instead of saying, I've got the clear path, everything is perfect, I can't wait to ride that wave of momentum, now you have to say, well, since it's 50-50, I got to be willing to manage. Your entry was beautiful. Pull back to support inside of triggers, and you rode that wave of momentum. It never gave you cause for concern and took it right at resistance. And guys, this is a great trade. And this is a well-executed medium probability trade. 50-50 trade. So Sid, you're going in the Hall of Fame today. Why 50-50, Lonnie? Hold on. I'm going to blow up that one spot. So remember, 50-50, Lonnie, has nothing to do with anything other than the location of the trigger lines. So let me help with a little clarity here. This is where Sid entered. Small triggers, 50% of my triggers have gotten through. Have gotten through the area. No worries, you're great. %50 of my triggers, the large, have not cleared the area. Does that make sense, Lonnie? It has nothing to do with price bars. It has nothing to do with what the area is. You're just saying half of them are through, half of them aren't. It's not broken yet. Cool. And all that means is that since it's not clear, I may need to manage a little bit. And let me compound on that. Why do I say that? Because remember, we're trying to figure out how to talk in terms of advantages. Sid has all the momentum in the world. But Sid says, my path isn't clear. It's 50-50. And you'll notice that Sid's entry is beautiful. He only gave up 33% of his advantages. He was still working with a lot of the good stuff. So you'll see it on the most current bar, Lonnie. And that's why I say focus on one bar. So look at this. On the most current bar, do you see odds favorable momentum? Of course. Almost everybody gets that one pretty easy. So if I have odds favorable momentum, well then I have to look at the path. See that divergence? And so first I look here, did I reach an area? Not quite. Did I clear the previous area? Not quite. So I have the potential to break, and if I take a pullback, I've got room to get to resistance. Does that make sense, everybody? Where is the market currently? Did it already reach the area or did it not? And then I go to, did my triggers clear the previous area or not quite? And you'll get into these little like when I look at a chart, do I have momentum? I don't. Stop, done. That's it, don't need it anymore. How easy is that? And then you just say to yourself, well, I don't have momentum. Why would I bother looking for a clear path? Let me sit on my hands and wait for things to get better. And that's your right. Guys, excuse me 1 second. I'll be back in like 30 seconds. All right, guys, I'm back. Sorry about that. My dog had to go out. So you'll get to the point, guys, where every time you look at a chart, you're literally going to go through that process. What do I see? And the first thing you're going to ask is, hey, do I see momentum? Absolutely I do. Do I see a clear path? Absolutely I do. Do I see an area inside of triggers? Well, it's a tick or two out. So what should I do? Should I chastise Bob for a tick or two? Or should I say, Bob, check it out. Everything was perfect. You made a choice to get in above it. Your stop is so small. Is it worth it? Do you know your rules well enough to be able to break them a little bit when the advantages outweigh the challenges. And that's exactly what Bob did here. And it's absolutely perfect. Target reached. Easy money. Right on, Better Dad. Did it crash on the same workspace? Sometimes if you keep crashing on the same workspace, I'll create a new workspace because there may be something corrupt in there. Just as you go through your little rigmarole. So if you do everything, come back up, and it crashes on the workspace again, I would rebuild the workspace. Another great trade, Bob. Nicely done. All right, Andy Man. Na, 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 na. Large chart, small chart. Odds favorable. I like how you pointed out 95, 95. So it looks like you had odds favorable, clear path, took a pullback to support, rode it up, made money. Had odds favorable, take another one just above the mid band, and made money. Nicely done, Andy. Trading with the path, trading with the trend, trading with momentum. It's funny how often that works. Odds favorable, 21, 21. I don't know that your path was clear, to be honest with you. Looks like a big fib right there. Maybe it didn't reach it at the time. Okay, it didn't reach it at the time. Okay, Andy, I gotta get you. Gotta get you, Andy. And I'm not saying this isn't your trade. Sell short at area inside of large triggers. How did you do that when your triggers were over here? How did you sell short at an area inside of triggers? You didn't. You said, oh shit, I hope it doesn't go without me. I'm just going to put an entry a little bit below the triggers and hope things work out. And you were probably a good, my goodness, 4 points, 5 points below the mid band. So, I mean, I like it. I love the look. It's a momentum trade. You traded directly into a divergence low, and that market could have gone all the way up here. With all that momentum, though, that's a good look, right? Quick profits. I think your entry, Andy, or your exit on the first one is almost a better entry. Let it start back down. Let the sellers tell you that they're not going to give it to the buyers if you're not going to use areas, if you're not going to use triggers. Good stuff. And I love the third exit. Makes perfect sense. All right, we got a threefer. All right, Better Dad. Let's see what we can pull off here. 50-50 trade. Strong bottom? Yes. Odds favorable? Yes. Clear path? No. And pretty close to the gap theory. Entered 2 ticks above the mid band, 4 ticks beyond the synthetic. Should have never taken this trade. 3/4 kiss, 50-50 rules. But there was a divergence and traded right into it. Rules are meant to keep me safe. I love that annotation. One of the biggest killers of that 50-50 look is divergence. And Better Dad, are you with me in here? Did you make it back yet? You have a knack for stepping out right before your charts come up. I don't think he's back yet, so we'll come back to it. Guys, if you have a strong bottom, if you've got great momentum, if you've got the potential to break and you're like, crap, divergence, it's okay to insist on that reversal bar, to insist on a little bit of confirmation. to force the market to go in the direction you want it to go before you enter the trade. All right, we're going to talk about the chili dog. We'll wait for Better Dad to get back. I think a lot of times in the market, Joel, we forfeit our, what's the word I'm looking for? We're in charge. We make ourselves victims by thinking that the market gets to dictate what we do. It doesn't. It really doesn't. Nobody can make you enter a trade. Nobody can tell you that you shouldn't wait for confirmation. Nobody can make you try to hold for 10 ticks past a fib. So stay in control of your trading. Insist, like demand, right? If you went to a steakhouse and they said, Joel, we only have fish, and you don't like fish, would you order it anyway? Or would you say, hell no, this isn't my restaurant tonight? No. Trading's the same way. Ron says, it's not my money until the back of the price bar clears trouble. And he says, it's not my money if I don't have odds favorable momentum. And it's not my money if I don't get below all the trouble over here as well. But if all those things come together, I'm willing to risk it. And I know that momentum is fleeting, so I'll get right out of trouble. And guys, base hits pay bills. This is a trade that Ron created. There's a beautiful trend trade, 50-50 trade. He doesn't take these. He waits to get below everything, finds a way to capture 100, 110, 112.50, whatever. And for his trade, Joel, there isn't one. There is no confirmation bar on this trade. This is a jump the fudge in trade. But let's do one over here. So Joel, let's say hypothetically, everything says up, the momentum is great, life is good, you get the retracement, and Joel, let's just say you get cold feet, and you're like, that mid-band's like 2 ticks. The mid-band's below. Do you see it, Joel? Here's the triggers, and the area is a little below. So Joel, your brain is going to say, because you're a rule follower, egads, that mid-band is below the triggers, the wrong side, nope, 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 right? And because you are a rule following kind of guy. But then your brain says, man, there we go. Holy smokes, this is the best look ever. I want me some of that. So Joel, you're torn, right? You're like, oh, this is my greatest look ever, but that's not the perfect entry. And Joel, that's where you say, if I can get a confirmation bar, a reversal bar up, I'll use that to enter and put my stop 2 ticks below it. Because then everything is going in the direction, and your confirmation bar is that up bar right there. And you know that when a reversal bar prints, your stop goes 2 ticks below it, so you've got your risk established. The large chart is killing it, and you forced it to go in the direction of your trade. But what's the cost for confirmation? It might be 6 or 7 ticks. So you might give up $60, right? $50 for that confirmation. But at least now you're not entering on the wrong side of the triggers. Does that make sense, Joel? So when the rules are met, and that's the key, that's your bar. That reversal bar maybe lets you sidestep the idea that it's a little outside of triggers. Because what happens when you get to the wrong side, it could have gone to this fib. It could have gone to these 1-to-1s. Hell, it could have gone to this fib. So what you're doing, Joel, is you're saying, all right, if it bounces off that bouncy area, just a little bit outside, I'll take that trade. And it's these little subtleties on entries, guys. You're going to all have them. You're going to get there. But it's going to be rooted in the idea that you know exactly what you're looking for, that you know exactly where you're looking for it. And you're going to force the market. You're going to say, market, you don't get a choice. You're either going to give me what I want or I'm not going to enter. I don't know. What's a continuation trade? Where do you see the continuation trade? Can you show me a picture? The answer is yes, Joel. But can you show me a picture and show me what it is you mean when you say a continuation trade? And if you're working through, and Joel, if you're working through the basics right now, I'll go find a picture for you. If you're working through the basics, Joel, if you're trying to get consistent on your plan, maybe continuation trade, maybe you're not reading charts fast enough to decide whether or not that's a good idea. But absolutely. Maybe 3 divergences pushes down. The key is that the large chart never changes, but absolutely. That's a momentum style trade right off the mid-band. It's a continuation. Same thing here. It's that continuation. Absolutely you can, Joel. But remember, more isn't always better. Sometimes better is better, so you don't confuse yourself with too many concepts as you strive for consistency. All right, Better Dad. We did this. We're going to do it again. And it's kind of cool because this is what started the whole conversation for confirmation bars. 50-50, strong bottom, odds favorable, not a clear path. So 50-50 lets you know that the path isn't clear. And you know that divergence is one of the biggest killers of the 50-50. And you say you shouldn't have taken this trade. 3/4 kiss 50-50 rules. Everything but that damn divergence, right, Better Dad? That one thing that kills it more often than it doesn't. So Better Dad, what we were saying here is, well, it's a great look. You have the strong bottom. You've got great momentum. You've got support right inside of that lower retracement zone. I might go for that one instead of this one. But that's the thing that's not perfect, right? That's the only thing up against this trade. Better Dad, could you say, if I get a confirmation bar from one of these areas in the zone, I'll give it a shot because of the momentum, because of the strong bottom? And if I never get that up bar, well, I simply won't take the trade. That may be where you grow a little bit with this trade. Initially, pure adherence to rules has got to be the focus, right? Learning, you're not worried about wins and losses. You're focused on your ability to follow a plan. That's the most important skill set any trader can have, I think, is being able to follow a plan religiously, right? And then, because you followed a plan and optimized your chances of success, you'll begin to notice little things, little nuances that may change your approach a little bit. Odds favorable, clear path, support inside of triggers, $100. Awesome. Did you get my feedback on this one, Better Dad? On the video you sent? Cool. Did it make sense? That's a great looking trade. Better Dad hard knocks trade. Well, it's hard to because I can't see your stuff anymore. Here, I'll show you. Because you guys know me, I take pictures of everything. Oh, I know which one it is, but you sent me a moving video. So it was easy for me to screen capture. I'll show you exactly what I meant. Right here. Arbitrary stop placement, Better Dad. You take the great entry, you take first profits, and instead of being break even, you decide to put your stop right in the retracement zone if it comes back. Not even giving it a full reversal bar. This is arbitrary stop placement. This is like jumping into the ocean with a giant laceration, hoping sharks don't come eat your legs. So it went the distance. Okay. I know exactly what you did. I can count. But check it out. Okay. So how would I ever know that? How could I ever know that you're locking in $100 and not just arbitrary moving a stop? I can't, right? Because you didn't tell me. But let's look at it. Large chart is odds favorable momentum. Large chart is clear path. If this market pulls back, couldn't it possibly go that far? All the way to the bottom of the triggers? That's your retracement zone, right? Wouldn't it suck if it pulled back to right there and then continued with the trend? So that's why I say an arbitrary stop placement is like chumming the water. It's setting yourself up to get stopped out only to watch it run with that large chart. So you already have two divergences on this trade, right? What I said is that two ticks below that reversal bar marker, what happens is I'll know if that divergence is true right about here. So it sets me up. Man, if you're going to be aggressive, that's aggressive. Half bar, right? I hate giving back $150, $200 when I'm up. If you're that scared of giving it back, just exit. Wait for the next trade. Because this is the same thing right here, right? I don't know why the stop was there. And if it's just a trailing stop, totally cool. But remember, if this chart's screaming up, I don't want to be in the retracement zone. I'd rather exit and re-enter, personally. Well, you have to define your exit conditions. Loss of momentum, divergence, that's a good looking exit. No momentum, even with the clear path. Loss of momentum, no areas inside. So you can say, holy crap, all my advantages are going away. You did great, man. You did great. Management's the one that takes the most work. All right. Odds favorable? Yes. Clear path? You thought so, but no. Fibs started forming and a mid-band is more than a full bar from triggers. The mid-band is not a full bar from the triggers, Better Dad. See how your large triggers are straddling your reversal bar marker? They can go up and smack into those and never make an up bar. So the mid-band's not an issue. It does become a 50-50, which means one divergence is bad. You take the entry, though. Two divergences is a great exit. I think, honestly, you did this trade great, dude. And one of the things that I really like is you're willing to accept risk. You're willing to accept risk going into a trade because of the advantages on the large chart. I don't think you realize how brave that is for a newer user. You got profit target 1, break even, thought it was a big deal, did it again on a bounce on this trade, lost the pick. In the middle of the trade, you realized what you had done, closed for 60, bring it here to take your lashing. No, it's a 50-50. It's a great entry. It's well managed. That second divergence is the one that says, all right, let's let it play out. Let's sit on our hands. Good job. 50-50, strong top. There's a fib in there. Enter 2 ticks above. Trading plan says no trades from 925 to 935. Okay, you don't trade the open. Stopped out here before you could adjust the loss. Right on. No worries. So let's go back to, do you see the triggers on your small chart? Strong or weak? Can you tell? See how they're inside? Weak. So if they're weak, you're lacking momentum, right? In theory. And remember that the small chart is the tiebreaker for the 50-50. Because you have it on the large chart. But when those small work inside, that's another one. Couple it with divergence. It's a good looking trade from a strong top. I mean, I would lose that trade with you, Better Dad. One thing, and Paul, who just posted in the room, on a trade that looks like this, no, not a disaster at all. Paul says, you're going to give me the highest entry with the least amount of risk, or I'm just not going to take the trade. Paul has developed a confidence in his study that he says, if it bounces from the fib, they can have it. I want the highest level of resistance or no trade at all because it's not perfect. And I'll give up 60 or 70 bucks, but I'm not going to give up 160, 170. Does that sound about right, Pinieski? Not Pinieski. I like Pinieski, even though it doesn't read that way. Good stuff, though, Better Dad. This not a disaster at all. Just didn't work. The biggest reason is it doesn't sting so much emotionally. Then you don't get all mad and do something stupid. Ha! I can do something stupid even when I'm not mad. You're absolutely right, though. Absolutely right. Ron, we saw that one. Crude has been super slow. Let's see what this does. There we go. Divergence on a 50-50 again. So it's almost like we're seeing a recurring theme. When it's divergence on a 50-50, it tends to not work as well. And they head faked you a little bit. And then, sure enough, deeper retracement on the 50-50. It's good look. Great management. Great management. Strong top. Crazy good momentum. Perfect entry. Out at trouble. Break even with a little slip. That's a good one, Better Dad. Was so excited for this, it looked like a high probability trend trade was setting up, then it lost odds favorable momentum, and it was a total letdown. Wah, wah. Sad trombone. So I took a picture like that today, this morning, Better Dad. I'll share it with you. Huge move, everything going, you're so excited, and then you're like, man, this thing's tired. I'm not going to take it. And by not taking it, it saves your bacon more often than not. When you see the market do this, I mean, that's down. I don't know how it's calculated, but that looks like almost 100 points. They're tired. People are going to start taking profits. They're losing momentum. And you'll also notice that your areas got to the wrong side of those trigger lines. This happens sometimes. This is just one of those, yeah, not my money. If they had gotten you up in here, beautiful. They just didn't. Great read, great patience. It's so hard not to trade after a move like that because you feel left out. You feel like everyone's been dancing and you didn't get asked and you're just going to go dance in the parking lot by yourself. Weak bottom, odds favorable, no. It's into the mid band, 1, 2, 3, 4 divergences. And you are unusually high above that mid band. Wouldn't you agree? You're not usually that far above a mid band. Fear of missing out. Ignoring the danger signs. Deciding that you have to take the trade. It happens. But this is what happens, Better Dad, when you don't take that loser down here and you didn't get paid. You're going to fabricate a little bit. These assholes owe me a trade. So it's a good lesson. And I'm telling you guys right now, break your rules on sim. This is where to do it. Break them on sim. Not intentionally, but oh my gosh. You can't hurt yourself on sim. All right, Lonnie, strong bottom. You say, oh man, you're making this hard for me to read. They don't owe you anything. Amen. You said no odds favorable momentum or clear path, but then you said strong triggers. Which one do you suppose it is, Lonnie? Is it no odds favorable momentum or is it strong triggers? Because it can't be both. And this may be a little confusion of terms. Strong triggers is odds favorable momentum, but you're right, it's not a clear path. It's a 50-50. And there's no divergence. And your entry is perfect. That's okay. So, little language recap. So, strong triggers is odds favorable momentum. Clear path is no turn. Okay, cool. 50-50. Is potential to break. Term is term. Yeah. And that's pretty common. People confuse 50-50 with the trigger lines. They'll call weak trigger lines 50-50 triggers. When in fact it's not. So this is a gorgeous trade. And you know what? Maybe you put the second one on there. I'm not sure if you did. Okay, this is just one picture. All right. So Lonnie, strong bottom, odds favorable, potential to break, perfect entry, get paid, no worries. Who cares about the money on the table? You put money in your wallet, right? This is beautiful. And now, Lonnie, the one that you didn't want me to talk about. Odds favorable, termination. You tried it again and gave it all back. See the difference? Room to the target, no room to the target. So I don't know what you made on this one, but you're up $110. Wouldn't it feel better to just be up $300 and pull this one out of the equation? And this is what we call avoidable losses, guys. And Lonnie, that's the, man, it's so strong, I think it's still going to go, look, right? Rule number 2 for the win, 100%. That's okay. That's normal. This is the most broken rule, Lonnie. Trading into an area because you're like, oh, that momentum's got to carry it. Momentum breaks areas. Momentum's more likely to break areas when the small triggers smash through. I love the first trade. I love the money. And then avoidable losses. Great job, Lonnie. Boaz. I bet it's momentum path entry. I bet. Odds favorable. potential to break. You do take the pullback, and instead of just jumping in because of the divergence and everything, because of the split, you catch it on the way up. There's your first one. Strong bottom, potential to break, quick entry, actually early entry, right to the fib. And when the small triggers break, you get back in and you take it right back up to trouble with the potential to break. Guys, do you see the difference? I want you to see this. Do you see how the small triggers have smashed through here? But on your small chart, it looks like a termination. This is why we let the large chart lead the way, guys. Boaz knows that. Boaz like, man, my large chart says potential to break with all this momentum and a clear path. I'll take a shot, not on the way down because it's not perfect. I'll get in on the way up. And I'll take it right back to trouble. That's why we use terminations on the large chart, though. That's a really good picture. I like that one, Boaz. Great trading. I like it. This one is a little early. But great job. Good stuff. All right. Paul says bingo. Best word in trading. What does that mean? That means with a strong bottom, with odds favorable, with potential to break, with the perfect entry, he hit his targets. Bingo. Bottom of window or no trade to minimize risk. And frustration if it doesn't win. You know, Paul, I didn't even look at this one and read it before I was saying. Some people, Paul, will take it from the bottom. I'm not telling anybody to trade like Paul trades, but I'm telling you there's a little bit of wisdom. It's not perfect. Let me have the least amount of risk. I like that. And then Boaz again. Everything says up. You catch one, perfect, get paid, pulls back, wait for confirmation, maybe because you're losing momentum a little bit, and you take it right back up to trouble again. I mean, beautiful. Great trading again. And we made it through all the pictures. All my new names are gone. That makes me sad. Great second hour. Great pictures. A lot of consistency going on here. Uh-oh. Ninja Trader crashed. Better Dad, I blame you. You put that juju out in the world. Let me open that up real quick. Guys, we are through the second hour. We've got 1 hour remaining. Whoops, I guess I was caps locked. What are we going to talk about, guys? What are you working on? Better Dad, Lonnie. Did I miss one, Boaz? One, two. Oh, yeah, I sure did. 3. And guys, if I ever miss one, make sure you tell me. Don't let me get away with that. Uh-oh, I froze everything. I lost my mouse, guys. I don't know if you can still hear me or not, but I'm about to have to jump out real fast of Discord. I hope you can hear me. I am dead in the water. Oh my gosh. you guys hear me? Are we good? Are we there? Oh my gosh. I think Discord died. Shit. Hold on, guys. I'm coming back. Coming back. My apologies. Education room. There it is. Pop it out. All right. So we have volume. Yes. Sorry about that. I think my mouse may be dying. You guys give me a Y if you can hear me. I know you just did at 11:01, but I want to make sure that I'm back. Okay, cool. Still trying to get it to share my screen though. So maybe it was Discord. Maybe it wasn't me. Awesome. Here we go. Discord is having the full struggle right now. So give me just a second. Here we go. Screen, go live. Yes! Strong top, odds favorable, clear path.
Order submitted.
2 divergences doesn't scare me. Let's see what happens. Guys, does this fit my rules? Let's just see. Hold on. I have strong triggers, right? I have a clear path. All my triggers are below fibs. I know where the retracement may go. I know what areas might create a bounce. And the cool thing is I know where my stop has to go if I get in the trade. You guys see it? That's it, right? That's the rules. Now, whether or not it gets me, I don't know. I don't know if it will. All right, Boaz, I'm going to try and get back to your pictures again. I scrolled up and I found 3. So I'm going to start, and we're just going to do all of yours. And I'm going to scroll again and make sure. All right, we saw that one. And we saw that one, yes? No, that's the one that we missed. But we did see that one because it piggybacked on this one. So that's the one that we missed. Odds favorable, potential to break, perfect entry. Get paid. I mean, my goodness, what's there to say except great job? And then Better Dad said, lie to me and tell me Boaz has been doing this for a long time. I don't know how long he's been here. It's been a little while. I know it's been a little while, so good stuff. I wonder if they did the head fake, where they make you think they're going without you and then they come back and get you anyway because, you know, that's what they do. We'll see what happens. I'll just leave that. I'll leave that limit order there just for grins. And let me open up another chart. So guys, while the S&P is opening, I'm going to take a quick break. I'll be back in just a minute. Think about what you want to talk about. Think about what's on your mind. And I'll be back in about 3 or 4 minutes. I'm going to let the S&P open up here. So talk amongst yourselves. Post them if you got them. Andy, some Novak love. It's all you got. Nexgen love. You can trade NASDAQ pretty good now. I like that. You're going to try micros next so you don't revenge trade your account to dead. Practice makes more consistent. All right, hold on, guys. I left my refrigerator open. Back in a second. I agree, though, Andy. All right. And that's a pretty cool thought, guys. There's a lot of people. Whoop. Your trade's like a moving market. Yeah, they're kind of slow right now. Have a great afternoon, Ron. Micros are always an option if you want all the exhilaration with a fraction of the risk. All right, Joel. Not so good bottom. Agree? Trend trade triggers going up with momentum. Yeah. Room to the first target. I like it. So Joel, potential to break or clear path. What do you think? Potential, perfect. Ron, you gonna beat that 79? I'm rooting for you. I shot a 91 yesterday. I struggled on the front nine. So you take the entry just outside of the trigger lines, though. And I like this. You know it's not perfect, Joel, and you say if a second divergence appears below the first one, I'll prepare for an exit. Nice. So Joel, what happened? Guys, I love your entry pictures, and I love the thought that goes into it. What happened? Did you win? Did you lose? Because I can't give a management lesson if I don't see what happens. Okay. So why do you suppose you lost? If you had to go through and re-annotate it. And sometimes it just loses, right? So watch this. I'm going to change a couple different things. Entry area inside the large triggers. No. Entry on wrong side of triggers. Pretty subtle, right? In on the wrong side of triggers, not at the area inside of triggers. You're 2 ticks from where your stop should be. And then I'm going to annotate this one. I'm going to cover up if second divergence prints. And what I'm going to say is with only potential, divergence tends to be a killer. Ask better dad, he'll tell you. So what happens, and the fact that it's not so good bottom. So I'm going to show you one of the reasons, and this is for everybody, not just you, Joel. I'm going to open up that KISS plan. And just for grins, we're going to drop these rules onto your chart. So from a strong top or bottom, there's our first no. Odds favorable, momentum 13. Yes. Smalls outside the large on the 5-1. I like it. You're good. No divergence. Damn it. And then it says divergence, no trade. So You had about half the good stuff on this particular trade. Probably less likely to win. Does that make sense? And this is why I think it's so important to know what kind of trade you're getting into and know what the rules are. And if you go back to this one, you already didn't have the clear path. And then you didn't have all the momentum. And then you didn't even have the right entry area. Joel, why would you? Okay, hold on. Hold on. My rules aren't meant for a trade. Why would you wait for the confirmation bar when half of everything is wrong? It doesn't make sense, right? Let me see if I can find... We've taken so many pictures today. I love it. There we go. So check this out, Joel. This is when I think you wait for a confirmation bar. Large chart is perfect. Awesome. Strong bottom. Odds favorable. Nothing in the way. I can't find anything wrong with anything except that damn mid-band's on the wrong side of the triggers. Joel, that feels pretty good, taking a confirmation bar off the area. Does that make sense? Everything is perfect, and there's one tiny little thing. Compared to, it's a train wreck. I'm not going to get in long. Or if you're hell-bent on taking this trade, sure, wait for confirmation. But it doesn't change anything. Confirmation doesn't undo a weak bottom, and confirmation doesn't undo divergence. Good question. Yeah, that looks like one that probably would have lost. And remember, guys, when I developed the KISS plan, most of it I stole from John Novak. And then I took all the things that frustrated me as a new user and created losses, and I incorporated them into that plan to give you guys the ability to absolutely take the best of the best so that you could avoid that heartache that I had as a brand new user. All right. Triggers wide, broke the fib, trending up with momentum. So strong bottom, right, Joel? Odds favorable momentum and clear path. Can you find anything wrong with that large chart? It's perfect, isn't it? Okay. Your areas are on the wrong side of the triggers, aren't they? Do you see it? Joel, this would be one of those instances where I say, my large chart is perfect, my entry chart is not. Maybe I'll wait for confirmation here. Does that make sense? And you created a rule. Yeah, so instead of saying areas inside of triggers, you said, oh, my small triggers are inside of the large. And that's a loss of momentum. But that's not what we need for the tiebreaker over here. Good stuff. It's a good look. See how here you had everything? And it just goes a little below. If you get in with confirmation, it makes it a little easier. Good stuff. Great lessons. Thank you, Joel. You guys don't realize how giddy I get when you start posting these pictures and creating these lessons for the room. Um, y'all make me look smart. Look at that. Oh, this is why you have to watch your trades, guys. Dang it. Who got that one? Because they were paying attention. I hope so. And since the small and large got below that divergence, there were only two. Perfect entry. Gosh, that was the easiest money ever. Anybody catch that? Crude has been on its hands for 6 hours, and now it's like, guess what, guys? Let's get paid one more time before the day's over. Good stuff. Good stuff. Just a heads up, guys. Most of Nexgen is going to be out of pocket for the next couple days, I think. Tech will not be. I will not be. So if you find yourself needing anything over the next couple days, feel free to reach out to me. I'll do my best to help. Joel, were you nervous about posting and now you feel good about it? I love it. You're flooding me now. We saw this one yesterday, didn't we? No, we're going to have class. So those of you that know Cameron's getting married this weekend down in Houston. I know John and Melinda are heading that way. Chris Novak is heading that way. There will always be class. All right. Joel, do you remember posting this one yesterday? He's honorary Novak. He's been in the family forever, but he's not a real Novak. Is it? Somebody posted the exact same chart. So let's go through it, Joel. Where are we coming from? We're coming from a great top. I love it. Triggers going down with momentum. I love it. You say because of the termination condition, if you have divergence, you'll be very tight on your management. Instead of saying with 1, 2 divergences, only the potential to break, maybe this isn't my trade. But you get in, you've got a lot of risk. That's cool. How'd that one work out? Are you doing playback on these? Is that what that is? That's March 11th. Didn't work. Terminations for the win, right? So, Joel, you're getting so many great lessons. Termination for the win, and you lost. Wrong side of the triggers. I don't think that was a winner. So I love it. I love that you're doing that. Can I make a suggestion? You guys know I don't give trading advice, but I'll give study advice all day long. Joel, when you go through on market replay, whoops, instead of hoping stuff works out, get your plan in front of you and hit pause. And if the rules aren't met, don't take the trade on market replay. I'll never tell you what to do with your money. But from a study standpoint, because what are you doing? So think about it. Think about it. Joel, if you market replay that March 11th, right? And every time you take a trade, you know without question the rules were met. 100%. You know the rules were met. You know what's pretty awesome? Is you're showing yourself the potential. Uh-oh. All right. Did that get it? I'm back. So what you're doing is you're showing yourself the potential of this plan. It's one thing to try to trade it live as a brand new user and hope everything works out. On market replay, you literally have the ability to hit pause and say to yourself, I have momentum. I have the potential to break. This is what oh shit, my rules aren't met. Let me skip this trade. Instead of saying, I'm going to take it anyway to see what happens. Because that see what happens mentality, it follows you to the live market. You're creating muscle memory. You're creating muscle memory. With everything you do on market replay, you're either teaching yourself to break your rules and hope for the best, and it's going to give you the win every now and then, just enough to make you believe that you should trade in determination conditions in a live market. Just enough to make you believe that that long was going to win, that that short had a chance, that short, that long. Short, long, short, long, short. Does that make sense? Practice like you're going to play, guys. Practice like you're going to play. But there's momentum. I'll trade into a termination. Why? That one held, and that one held, and that one held, right? What makes you think this one's going to be special? So, pretty cool. That's, I think, one of the great things about market replay. You know what I used to do? You guys want a little admission of guilt here? Is I used to say, oh man, I remember this. I remember what happened. And I would go long right here and convince myself that I'm a badass. And I remember that 65 held. And look at all the money I pretended to make when not one of my rules were true. And guys, you carry that false confidence into the live market. And that's one of the reasons there's the phrase simulator millionaire. I'm a simulator millionaire. I trade 10 lots with huge stops and fight trends, and I win just enough to make me believe that I'm doing something right. I did that. That's exactly what I did. And when I got to the I'm so good at this stage because I believed my own BS, that's when I lost $5,000 in 2 hours, almost instantly. 21 trades, $5,000. And it wasn't prop firm $5,000. It was, oh shit, I have to tell my wife about this later $5,000. So be careful on that false sense of security, guys. It'll come get you. It definitely will. Great question, Joel. Would this be a term? Joel's thinking, hey, Mark, I see divergence, divergence, divergence. Well, that's 3 in the same location, right? So, Joel, remember that on divergences, this is such a good question. Let me extend that one out into the great beyond. Once the small and the large get below, it's broken, and this is no longer a part of the equation, and it goes back. That's your first divergence. Does that make sense? So great question. So nope, you're on 2 divergences. Perfect entry, odds favorable, clear path. Nice question. Thank you for that. Better Dad, you have a question about market flow. In the 8 range chart, could you show how it could be helpful in high probability and 50-50 trading? I'd love to. So one thing that I used to do, Better Dad, believe it or not, market flow was a part of the education. Market flow was a part of the very, very basic. Everybody ended up with it. And we discovered that it was a little confusing. So let's do this. I'm going to circle tails on my large chart where entries could have potentially happened. And we're just going to look on the market flow chart. So the circles are showing up. I'm just going to make this huge. Or we'll do this. So this one doesn't need it, right? It's perfect. So better dad, why would you go to another chart if this chart's perfect? That would be the first lesson. If your 13-2 is 100% ideal, best of the best, why on earth would you cloud your judgment with a third chart? So there's your first lesson. If you don't need it, don't use it. Fair enough on that one? There you go. Well, you said high probability trend trade. That's exactly what it is. So it's not helpful. Haha. You know that I latch onto language, right? There is no secret sauce. Follow your rules. There is no secret sauce. I can't stress that enough. Same thing here. High probability trend trade. Why on earth would you go to this chart? But then we get here with the potential to break. And there's a couple things that I'll look at. I will look at the momentum, and the momentum sucks on this 50-50 trade. And then I'll say, okay, if I want to take this trade, if I want to enter this 50-50 trade, and let's go back to it. So this was it right here. So better dad, you had a 50-50 with divergence. Is that your trade? No. But I got an up bar on a market flow chart. This is how people do it. First, they say, I'm thinking of the trade, and they take this one. And it's not even from the area inside, and they get stopped out. So one of the ways you can use it, and let me see if I can find a good example. I want one that's really good but not quite perfect. So let's look at 10:30 a.m. Okay. We're going to build a new workspace here. And we're still not getting any sort of confirmation on these at all. I'm trying to come up with a scenario, but every one of these market flow charts absolutely sucks, better dad. Every trade that I have looked at so far, market flow would try to talk you out of this trade. So let me find one. It's okay, let me find one. And let me just do, all right, there's one on a circle. There it is. That's the one I was looking for. 6:18 a.m. There it is. All right, here we go. Finally won, right? It took forever. So let's say, better dad, here we go, finally. I've got a strong bottom, everything says up, and I really want to take this trade from the areas inside, right? It's not perfect. You see how it's just not? But that's a good look. In divergence prints, you're like, gosh, but it's from a strong bottom. That's the best momentum ever. The potential is there. So what you can say is my rules are really close to being met. And I'm going to break them anyway because I want to be in this trade. Do you see that arrow? That's what we call market flow confirmation. You could say the only way I'll take this trade is if I get market flow confirmation. It doesn't guarantee a winner. But that's how we used it initially. If you were looking for a high probability trend trade and divergence printed, the old standard was you wait for market flow confirmation. So you would say, this is my potential. This is where I need confirmation from. If I get the bar, I'll take it. If I don't get the bar, I'll choose not to. So for trend trades, that's kind of it. So on this one, potential to break, 50-50. Divergence prints right there at 955. Whoops, that would have been this one right. Oh, that's it right there. But you don't need it. There's no divergence. The second pullback has divergence. So maybe you're saying, I'll wait for market flow confirmation because of the divergence. And you never get it. You never get a confirmation. So you might miss that trade if you're expecting market flow to create a scenario for you. So my opinion, better dad, is on trend trades, it's just better to follow your Renko charts. But can I give you something else? So one of the ways I'll incorporate market flow, let me get to closer to the live market and get rid of all these circles so I don't confuse myself. If I get a look that is the potential for a strong top, no triggers through termination. No triggers through termination. One of the things I can do, and this is a trade that my brother taught, and there's a couple of them. So Nexgen has the HVA trade. Termination, triggers roll, sell the pink line. And we've been teaching this one forever. Termination, sell the pink line. So market flow gives you an opportunity to get in a little closer to the termination condition before the trend trade. There's also a trade that says when you get that termination, this is the one my brother did a big private room on. If you get a white bar off of the termination condition, sell a pullback to the triggers and take it to the first trouble. So this is also a look. When you see a white bar come off of the termination's more likely to hold. It's not guaranteed, but it can. So that's one way you can use it. There it is at the bottom. There's that white bar right off the bottom. A little confirmation that the bottom is good. And then on this bar, you would hope it would come back and hit those small triggers that were up and fast, and that would be a potential opportunity. And then the market comes up, and then right there at 27.30, that was your trend trade. You got confirmation, but you don't need it. So I think, and this is just me, and I'm not trying to impart my will upon you, for, whoops, wrong one. For a high probability trend trade, why cloud it up with the third chart? For a medium probability, 50-50, why try to convince yourself to take a trade that really isn't a good trade? You know, that doesn't have the highest chance of winning already before you get there. But as you grow with the software, the HVA trade is a freaking amazing trade. And it gives you a shot just to catch tops and bottoms before the first trend trade sets up. So I don't want to tell you, no, don't use it. What are you doing? I want to say, maybe you just don't need it in some situations. But here's a great way you could add it in if you get to the point to where you feel like you want to do a little bit more. And that HVA trade was always the second trade that I taught, because you had to understand termination conditions. You had to be able to wait for things to roll. You had to identify that there wasn't trouble in the way. And then you're literally just selling a pink line or buying a green line. Absolutely. And it's one of those things, like I don't say no, maybe not yet. Get your mojo down with the easy stuff. Get consistent and then start practicing that next one. See what happens. Paul, small's outside the large. So, bad bottom, mid-band holds, everything rolls with the potential to break and strong triggers. Paul says, I'll risk a little bit to make that money. Nice trade, Paul. And Better Dad, you're welcome. But can you see why I took that out of the core curriculum? Can you see why I don't teach that when we talk about high probability trend trades? That's confusing. Great trade, Paul. One of the things I did, whoops, I just killed my chart. John Novak gave me market flow. He goes, hey, Mark, welcome to Nexgen. Check it out. Here's market flow. And it was so funny. I love sharing the stories because I get that from behind the microphone here, I look pretty well put together, right? He can read every chart. Man, he didn't tell me this. Wait for the rules to be true on Rinko. So it was hilarious. Let me find the picture. This is my favorite market flow picture. Sorry about the scrolling. Don't stare at it, right? If your rules aren't met, don't do it. Better Dad, he gives me this chart and I keep seeing these arrows and I bought and sold every one of them. And of course I'm on simulator, but I really think I took about 120 trades that day. And I was down like $7,000 because I wasn't letting the Rinko charts lead the way. All I did was confuse myself. And then I called my brother. I was like, I don't know what you see in this chart. This chart's a bunch of bullshit. Because I got slaughtered. But I was like trying to buy against momentum and all that sort of stuff. But it's alluring because you see other people using it, right? You see other people, well, they're using it. Why can't I use it? Because it doesn't have to be that hard. It just doesn't. It really doesn't, I promise. Hey, if you ever close out a chart, so I accidentally closed out my market flow chart. Let me show you guys how to fix that without having to rebuild. Go to your workspaces and close it, the one that you accidentally delete a chart on. And when it asks you to save it, just hit no. And then when you reopen it, it'll go back to that default. It'll go back to the way it was when you first opened it. When I first started, I kept closing out my charts on accident. I'm not sure why, but I did. And so I learned that trick pretty quick. Pretty good one. Good stuff. What else are we talking about? Gino, how you doing? How's your golf game? I'm stuck right around 90, Gino. I need lessons. He may not be in here. Gino says things to me that are obvious to him that aren't obvious to me, and it makes me better at golf. And see, it came up, and I still have my market flow chart now. What's your thing? Have you guys done that drill yet? Oops. I like the drill. What's your thing? Momentum trade with market flow support. Boaz, I don't know that that's a thing. I don't have a momentum trade with market flow support. There's a momentum trade that says when you come from a strong top or bottom and you have a clear path, you're going to use the small chart momentum. I'll show you what it looks like. There's your termination. One didn't set up. There's your termination, 928. That's not it. Let me get to where we are. Okay. so we didn't get one here. Let me see if we got one off this termination, Boaz. We didn't get one off that termination. All right, let me just find the look. There we go. 1230. So the look, Boaz, is this would have needed to be a termination condition. So first, you have a no triggers through termination condition. It's got to be a strong top or bottom. That's the first part of it. So we're gonna create our own Fibonacci line here. And then from that strong top or bottom, things begin to roll. More specifically, these small triggers on the small chart come down super strong. You're going to let them break through an area, and then you literally just sell that area. And it's one of those things, small triggers break through because of the strong top or bottom. You notice that there's odds favorable, but it's only small chart odds favorable. And what you're saying is, I'm anticipating more down. Let me take that quick little snippet right off the fib. And typically management for that is if it makes 2 up bars, I'll exit. So it's like a 4-tick risk, 5-tick risk trade typically. So that's your look. And we'll go back and we'll look again, 1025. If that fib wasn't in the way, Boaz, it's the same look off the midband. Do you see it? Right there, right at the triggers, but the fib's in the way on this one. But that's your look. It's a little snap, boom. And it's just that, it's that small chart momentum. And there's no areas, so that wouldn't be one there. We'll come back to 902. Never really set up here. So we'll back up here. Never really set up here. That turned into a trend trade. So it starts with a strong top or bottom. That's kind of a crossbreed between a trend trade, 630. So this is a good look. So check this out. You got the termination. The triggers didn't get through. The small triggers are up really strong. And you take that little pop back, right, too. Pop, pop, right? And it's the small triggers here and it's the large triggers here. That's a good looking momentum trade. And it starts with the termination condition. Is that what you were hoping for? You don't need market flow for this chart or for that trade. You need first a strong bottom, and there it is on 1-to-1s. Smalls break through, pop back to the 1-to-1s, take it to the fib. That's your look. Good question, Boaz. I hope that was helpful. So go back and find that. Anytime you see a strong top or bottom, scroll back and see if you get that snap. There's one. See how the small triggers didn't get through? And it didn't work? That's a big part of it. That's a big part of it. And right now, if you were thinking the other direction, this would all have to roll and give you odds favorable first. Absolutely, Bob. I'd love to. Does that help, Boaz? I love the 3 big yeses. Makes me feel like I did something right. 4 big yeses. All right. So what's a prop firm? Here we go. And I'm going to use the Nexgen one as an example as we build it. We're so close. So it's a funding firm. It's a, hey, Bob, show me you're good at what you do and trade my money. So what happens is you're going to trade your plan or ours, whatever, doesn't matter. But you have to be consistent, and that's the biggest thing. So there's evaluations. And I don't know if all the prices are right on these guys, so we're just going to go through it. So 25, 50, 75, 100, 150. On a $25,000 account, you're going to simulate it, Bob. You're going to say, Mark, I want to be a part of this. I want to pass your test. I want to be a Nexgen prop firm trader. So on this $25,000 account, the first thing you do is you pay me. You say, I'm going to pay you for the opportunity to pass your test. Once you pay me, you're going to get a simulated account. You're going to get software. You're going to get everything that you need. And you're going to have to make $12.50. You can't trade more than 5 contracts. And you can't lose more than 700 a day. So if you hit 700, it's going to shut you down and keep you from blowing out your account, which is nice. But if you lose $17.50 before you make that $12.50, well, then you fail your evaluation. And you have to start over. You have to go back to prop 1. But instead of losing $17.50, you're out the cost of the evaluation. And you have to be consistent. So you have to trade at least 5 days over the course of 5 days. So you only have to make $300 a day, $250 a day, Bob. So let's say you hit it. All right, I made my $12.50, I made my $27.50, I made my $42.50, whatever it is. So then what happens is there's your evaluation rules, what you have to do to get it. There's your drawdown, making sure that you don't hit your drawdowns. And then you go into, can you guys still hear me? My mouse just died again. I think my battery's dead. I'm going to replace it. Okay, there we go. So then you go into, I'm funded. Once you pass your evaluation, stop trading. And you're going into the funded account. Come on, batteries, just make it to the end. So first you're in a sim account. You can still get paid on a sim account. You have to go through, you still have to be profitable, you have to hit your goals. But after proving profitability, you can, I'm just gonna X out and stop using my mouse because it's dying on me. After you prove profitability, you can start to withdraw, Bob. And if you withdraw 5, 6, 7 times, you're super consistent, then you can get moved into the pro account or the pro trader account. I don't remember what we call it exactly. I guess I should have kept that up. And then not only are you still getting paid, but we're saying we got to keep our eyes on Bob. We're gonna watch what he's doing, and we might mirror your account. And there's a lot of things that set us off that are different, guys. 100% of your first 12.5. That's one of the things Nexgen's going to do with their funding account. Not the 80-20 splits that are pretty common. And then 16 payouts. If you can make money 16 times in a row, the rest is yours. You don't ever have to give us a percentage because we're going to be doing what you do. Other things that the Pro Trader account, that the funding company is going to have, and I'll log into mine real quick. You can buy your trading accounts. It'll talk to you about it. But guys, we're going to have a copier. You're going to have a copier built into it that you can lease. I think it's $20 a month. So I've got my leader account. And then I've got follower accounts. So everything that happens in this account happens in these accounts, which is pretty cool. What about another transaction type when you, I don't know, Boaz? I'm not sure what that means. I'm sorry. I'm not following you. There it is. So the copier, and guys, this is for my TradingView account. And I'm getting stats, so I had to blow it out this morning. But in TradingView and through AMP Futures, I've got my accounts, and I'll show you guys. So I blew it out this morning intentionally. I lost 1,300. I hit my stop loss, and I had my copier going. And you'll notice that this account is at the same loss, and this account is a ghost account. This account is at the same loss. So the way it'll copy profits, it'll profit losses or do losses, but you could actually open up multiple accounts and trade them. Does that make sense, Joel? And Boaz, I'm sorry, I don't understand your question. So wait for, man, Bob, you got to make your own decisions. You've got to make your own decisions. And Bob, I don't know if you're feeling like, man, I'm ready, right? I'm ready. Apex has an 80% sale right now. I mean, of course, I want you with us, right? Joe, the second we are live, the copier will be live. We won't go live if the copier is not available. And they've worked out the bugs on it, I think. And that's what we've been doing for the last 8 months, guys. We are compiling stats and finding bugs and fixes, and we're so close, which is pretty cool. But Bob, Apex has 80% off right now. And if I'm not mistaken, that means that you could do like a $50,000 Trade Evade account, and it's like 38 bucks. And Andy, I'm going to respectfully disagree with you. What's the difference between a micro and a big contract, Andy? Nothing. It's the same trade, right? It's the same rules, it's the same entries, it's the same exits. So why not prove that you can follow your plan on Simulator? And then if $10 is better than $100 mentally for you, then that's cool. But what happens, Andy, there's a flip side to micros. $100 feels significant. Is there anyone in this room that couldn't hand me $10 or $20 right now and never miss it? So you can take $30 of losses, no big deal, right? But that translates to a $300 day. So make sure that you're not fooling yourself into just follow the rules. The goal's got to be following the rules. And when you really trust your rules, the money isn't that scary. Better Dad, payouts work when you're profitable. You have the potential for payouts is the easiest way to say it. And every company's different. And guys, nothing is set in stone on what we have here yet. This website's not even available to you guys yet. But payouts, well, I don't know where it is. Payouts come from consistency, right? Hitting a goal and then being able to take a percentage of that account. And you're a 1099 employee. So you're taxed as a 1099 employee. There are consistency rules you have to have, depending on, they're all different. But a lot of places say, well, you've got to have at least 5 consistent days, 5 trading days. You can't windfall. You've passed over 60 evals but can't make it to payout time. So Better Dad, can I ask you a question? And you don't have to answer, but I'm going to give you something to think about. When you pass the evals, are you passing them following a plan, or are you getting lucky, right? A lot of people, so there's some companies, Joel, it's something that you can lease if you want to use it. I think it's going to be 20 bucks a month for the copier, instead of paying $400 or $500 for Replicano, whatever it is. So hypothetically, Better Dad, in Apex, I forgot where I was going with this. Okay, they had a 1-day pass. And all you have to do for a 1-day pass is crank it up to the 15 contracts they let you trade, right? and then one day pass. It's gambling. But better dad, let's do this. You're either going to love this or hate this. Hold on. Hopefully you love it because this is very real world. All right, so better dad. You're in your evaluation and you are committed to high probability trend trades with intelligent targets, right? And you're consistent. Follow my rules, follow my rules, follow my rules. It's simulated. Who cares? No money. Doesn't matter. This is my trade. This is my exit. This is kick ass. Right? And everybody does that on an evaluation. And then the Mike Tyson effect comes in. What do you do when there's something to lose? Well, now I'm thinking about the money. And I know that I shouldn't take a 50-50 with two divergences, but what if it wins? And better dad, the what if monster is the biggest killer. No, Mike Tyson, Andy, is everybody has a plan until they get punched in the mouth. Everybody has a plan until they get punched in the mouth, and then they change it. And for most people, once you go live, you stop focusing on the process that got you there. You start focusing on the money that you're going to make. Does that make sense, better dad? Would that be fair? You had a plan, you followed the plan, it got you where you want to be, and then once you get to where you want to be, you change your plan because now it's about the money and not about the consistency. That is one of the most common things, guys. That's one of the reasons I'm so excited about what we're doing. Having Nexgen, who's got 28 years teaching people to trade. And now we're going to give everybody the opportunity to get that funding with the same company and still have the feedback and the coaching and all those things that we do. And that's it. And better dad, did you ever blow out a funded account in less than 2 hours? Did it ever take longer than 2 hours to blow out your account? I've been asking this questions with a lot of people. Most people blow out their accounts. Uh-oh. Discord just died. What was that? That was wild. I just lost this room. Almost everybody that I've talked to blows out accounts inside of 20 to 30 minutes. Yep. So it's interesting. And I was doing some research on funding companies and payouts. And a lot of people never make it to their second payout because they cut themselves short on the first. Who left? Sorry, can you guys hear me? Sorry. No. Oh my gosh. No, Discord booted me. Can you guys hear me now? I'm so sorry. I was talking. You guys got me? We good? There's pictures. It's a Discord issue this morning. There's no doubt in my mind. Those damn batteries. So what happens a lot, guys, is the focus on money supersedes the desire for consistency. It's normal. You still can't hear me? How about now? You got me now? Yeah, there it is. Sorry, guys. So when I say focus on the process, not the results, that's the key. You have to accept losers are going to happen. But I was doing some research, and most people don't make it to their second payout because a lot of these firms will tell you, okay, make your 2,500 again, and then you can start taking payouts. And then people take $2,000, right? Or they take 1,000 out, and they leave themselves short. They don't leave themselves any account to cover losses anymore. And they blow out and they start over. And there's a lot of things. But I want to say I've written things. How do you beat the funding accounts? And I'm not even sure if I still have it. Have a plan. Follow your plan. Have a plan. Follow your plan. Make your rules your life. Have a plan. Follow your plan. Because once you justify one bad trade, especially if it wins, you'll justify all the trades. So typically, that's human nature. But guys, I'm not a psychologist. I'm not a psychiatrist. But I do know what love is. Consistency, guys. Consistency is